President Trump meeting today with his cabinet. He's touting economic wins and says America is bringing in trillions from his tariffs. Here's the president last hour.
Factories are booming compared to before I took office. Domestic auto production is going to be, it's going to be so thrilling in 2 years when you see the numbers, because they're building plants all over the country. They're all coming in because of tariffs. They don't want to build, they don't want to pay the tariffs. And if they build their plant here, they don't pay the tariffs. And they're pouring into our country.
So, Kenny, the president's making a pretty darn bullish case there, but a lot of the talk in the economy lately has been softening, weakening. What do you think?
Right. Well, and that's okay. The economy, we may be hitting a soft spot. What he's talking about is not going to happen for a couple of years. It's not going to happen overnight. They just negotiated these deals. It's going to take time to work. But I'm not even sure that I really believe the economy is softening. I think some of the hard data continues to be relatively robust. Labor is a little bit, gave us a little bit of a warning signal last week or 2 weeks ago when they revised the non-farm payroll number lower. But look, unemployment is still at 4.2%, which is essentially full employment in this country. Yeah. And so I don't necessarily see that employment is falling off the edge yet. I'm not saying that it's not going to get softer. I'm just saying I don't see a panic yet.
Tom, the president is talking about manufacturing here. What's your read on the manufacturing side of the U.S. economy? Is the comeback gaining the kind of steam he's talking about?
We are seeing reshoring in the auto sector. I mean, one company we own is called Cooper Standard. We've had for 3 years now, and you're now just seeing the volume start to improve. That stocks went from $5 to $30. It's just getting started. We're still at anemic volumes. If you look back over the last 45 years, U.S. SAR, the sell-through of new vehicles, has been between 15 and 18 million. It's still in the mid-15s, and it's got a lot of runway. And that's going back to 1980 when the population was only 2/3 the size. It hit 18 million SAR at peak. So we're going to see a tremendous boom for the auto sector moving forward. Lowering rates on the short end is going to help with financing. But the number one metric that I look for volumes on the reshoring is incentives and in inventory growth on the lots. We are starting to see incentives rise. That's a leading indicator for production. That creates a lot of high-paying jobs, great for Main Street, great for Middle America. So the things that Trump is incentivizing business to do are working, and we are seeing record revenues from tariffs, over $30 billion last month.
Right. Marcus, you sell a lot of things that you could hitch to the back of a car, and so very related in that sense. Are you as bullish as the president about the return of manufacturing, the auto space? We're still kind of unresolved with Mexico and Canada. That's a big deal for the auto space. How do you read all that?
Well, the RV business is actually, as an industry, not great. Our business happens to be good. But I think the point that you were making is I don't think the economy's that soft right now.
Yeah, I don't either.
You have a bunch of zombies walking around, not sure what's going to happen with the rates. And you have a lot of companies who are looking at big debt, along with the country looking at big debt, wondering, how am I going to pay this interest expense? The rates come down, capital starts to flow.
Right.
And it really is that simple.
Lydia.
Agreed.
I always like to look for data on what small businesses are doing and how they're feeling. And today, we did get a read from NFIB. They put out an industry-specific survey that gives us a read on the optimism for various industries. And speaking specifically to manufacturing, it's really optimistic. They measure construction, they measure manufacturing, they measure services and retail. Manufacturing is the most optimistic of them all. And that might be in small part, or maybe in some measure, due to the tariffs, that are redirecting, redirecting industry back to the United States and domestic onshoring. I will like to say, I always like to remind, and I know people sometimes roll their eyes when I talk about this, but there's still the lingering tariff case, the challenges on Trump's tariffs and how he's using emergency measures in order to accomplish them. We're still waiting for the decision on that. And if you're watching the court cases and how they unfold, the judges seem awfully skeptical on how he's using those powers. Now, with that said, he does have other options. And with I don't know if we're up to trillions of dollars in tariff revenue collected, but the billions of dollars that are projected to be collected throughout the end of the year, I think there's a pretty good case to be made that, listen, Congress should just kind of bless Trump's use of tariffs at this point because of the economic benefits that we are seeing incurred.
He's got another tariff he's talking about on countries that tax tech companies, okay? And we've seen the battle a little bit with Canada. It's still outstanding with EU, not resolved. Is that the kind of thing that could ramp up uncertainty on tariffs again if he's serious about this?
Well, it might. Listen, I think any time the situation gets anxious, then it ramps up uncertainty on what's happening with tariffs and what you're going to do and what you're going to say. But we haven't actually seen that, right? Look what's happened. The tariff drama that was supposed to produce 50% tariffs is not anything near that. And so that whole conversation has calmed down. I think once you get individual conversations like now tariff on tech and they're trying to monitor and furniture.
Well, the tariff on tech is when I'm going to play right into your argument. The tariff on tech, is it because we now own part of a tech company?
Oh.
Well, you tell me. You're the guy who likes owning it. So I mean, I don't know.
Do we actually own it yet? Do we actually own
we do.
it yet?
We own 9.9%.
Oh, we do?
Yes.
It's done?
Yes. We're going to make a multi-bagger on that as taxpayers and outside
Now,
investors.
here's the guy who loves
But I agree with you. I think that's okay. We gave him the money. As long as we don't have control in the C-suite.
Don't get him started.
As long as we don't have control in the C-suite, I'm okay with it.
You don't have to have control in the C-suite. You have control through regulation. And the minute you start saying, I'm going to tax other people to do all these things, I'm going to move things around, you are controlling it.
By the way,
I just got my blood pressure down from the first time.
I know, I'm trying to help you.
I'm not going to get it back
Try
up.
to help you.
But I do want to get to this. I actually hate the fact that, like, the EU, we innovate tech products. We go over there, and they don't innovate anything, but they treat it like a piñata. I actually don't like that. And so I appreciate that the president's going after that, because I think that creates an unfair basis for trade for our tech companies, even tech companies here that I don't like all that much, Tom.
Yeah, he just wants it to be fair. If they're going to tax our tech companies, we're going to tax them back. It's a negotiating tactic. As I've said in the past, the way Trump negotiates is he punches you in the face first, and then he offers you an ice pack, and you're so happy to get the ice pack, and then you do a deal. So this is going to be the same exact strategy with the EU. It's led by a bunch of bureaucrats. They need a wake-up call. They'll come to the table. They'll come out with something mutually beneficial, and we'll move on.
The math is math. Tariffs are coming. Things are going to be more expensive. What's the offset? Is the offset interest rates coming down?
Yes.
I think
is that why we're banging on the table for interest rates?
I don't think they're going to come down as fast as maybe people thought they're going to come down, but I do think the trend is going to be lower.
By the way, the number one thing with furniture, and I've been looking at, I do turnarounds. My nickname is Turnaround Tom. I've been looking at Leggett and Platt, all these furniture companies that have been left for dead.
Did you name yourself that?
No. Everyone calls me that.
Everyone calls me that. Ask anybody.
Don't be silly, Marcus.
Clear, like the fixer.
By the
I
way,
came up with that. Like I made myself the fixer. Just so we're clear.
The number one thing you can do for manufacturing is lower interest rates because they're capital-intensive businesses.
Right.
And the number one thing that we manufacture, among the number one things, is housing and everything related to housing. When you buy a new house, it's family formation. You buy a car, you buy a baby stroller, you buy a crib, you buy a couch, you buy a chair, you buy all the things that you didn't have in the apartment in New York City when you have a family. So Trump knows this. That's why he's been so steadfast on the Fed getting to neutral. Not saying let's be irresponsible. Just get to neutral. We're 100 basis points above neutral.
What
Let's
happens
go.
if it drops by 100 basis points?
I think it's game on. I think we're going to see a level of prosperity on Main Street. All these people that have trillions trapped in equity in their homes, all these businesses that are servicing high interest that can refinance and invest in factories, invest in reshoring, invest in the things that are going to really drive Main Street. If you remember his first term, Wall Street did okay, but there was some volatility. Main Street, in terms of real wages, did better than ever. Okay, and I think he's setting the stage for that to be the case, where you're going to see Main Street prosperity. You saw the CB consumer confidence numbers better than expected this morning. You see real GDP now this morning, 2.2%, not bad for Q3. So all of this is positive, and it can't just be AI CapEx. We got to build real stuff.
100%.